We have Vishnu Rana, who's the economist at S&P Global Ratings, joining us this morning. Hi, Vishnu. Thank you so much for joining us on ET Now. Pleasure having you on the show. Let me first ask you about the tariffs, the impact that this is going to have globally. We've been getting a lot of commentary. At one point in time, you think that Trump is going to go all out, all aggressive. This morning, you got comments where he said April 2nd is when he'll put the reciprocal tariffs, but they will be lenient. How should one read into all of these developments and react to that?
Yeah, thanks for having me on the program. Always a pleasure. And indeed, in these highly uncertain times, a lot to watch out for. So the impact of tariffs on the global economy is going to be significant. We think that it is already having an impact in terms of delaying investment plans for firms across the region in terms of until there's more clarity in terms of where the trade tensions are going to materialize. This is pulling back investment, and it is likely to have slightly inflationary impacts in the US in particular, which means slightly more elevated interest rates, and this is going to impact Asia Pacific through tighter monetary policy. In contrast, in the region, we think that there's more trade-sensitive economies will be affected a little bit more domestically oriented ones, such as India, will be affected a little bit less. All in all, certainly interesting times and a lot to digest.
Times indeed. Hi Vishnu, this is Snehi also joining in the conversation. Now from what we understand, S&P has lowered its GDP forecast for India by 20 bips from 6.7 earlier to 6.5. Do you believe this is only on the back of the tariff uncertainty we are seeing, or do you think there are some internal headwinds like commodity inflation or monsoons or other factors that could be at play over here? And what's the rationale behind this 20 bips drive down for India's GDP outlook?
Yeah, so the primary driver for our downward revision of our forecast from 6.7 to 6.5% for the upcoming fiscal is the domestic story. So we think that the slight slowdown in domestic economic momentum over the past few months is the main factor that is leading to our downward revision. We think that this is going to come back into the picture. We think there's a recovery that is going to start towards the later half of this year. However, the external environment is not supportive because of the trade tensions that we just spoke about. So it's as if there's this domestic slowdown, which is not being offset by external demand, which is the reason why we have that slight downward revision.
Growth outlook, where you're given that downward revision coming in, and yes, it is very visible. We've seen a slowdown in the growth as well in India, and also given the fact the uncertainty globally when you talk about the moves coming in. But I wanted to understand what's your view and what you're penciling in for the interest rate cycle, given the fact that it looks like we are in for a bit of easing or more or a profound easing of interest rates, at least back home. That's what the indications that we are getting in. Actually, reports also suggesting that the RBI governor is likely to tilt in favor of having more lower interest rates. What's your assumptions and what are you penciling in when you talk about the interest rates back home here?
Yeah, so one of the factors that will support the outlook for India over the course of the upcoming fiscal is the easing in monetary policy. One supportive factor for that has been that inflation has been under control. So inflation has come down to within the RBI's target range, and this gives room for the central bank to ease policy. Interest rates have been relatively elevated in India for a couple of years now, which means that there is space to cut. We expect 75 basis points of cuts in monetary policy in India, so to 5.5 by the end of the fiscal. This is in line with the rest of the region. I would say that where we don't see so much inflation, it's a bit in contrast to what we see in the US. We don't expect that much easing in the US, so there's going to be this capital outflow pressure. But for India, it means more accommodative monetary policy and some support to growth from that space.
Since you said that you are expecting 75 basis point interest rate cut till the end of next fiscal year as well, I suppose. I want to understand, so are you expecting that come next month also the RBI or the MPC to look at lowering interest rates?
So following the easing in February, we think that there's probably room for another rate cut, while inflation continues to be in the tolerance band. So we expect that there's likely to be some easing in the near term. It may not be precisely at the next meeting, but we think that at least over the next few months, we should be seeing in some rate cuts coming in. 25 basis points, probably not very aggressive, but certainly on the path towards more easing towards the end of the year.
All right, then, Vishruth, we leave it there. And on the optimistic note that hopefully we will have lower interest rate regime. We've been in a tight regime for a while right now. But thank you so much for being part of the show and talking about the global economics.
If you like this video, then like, share and subscribe to ET Now.